Matt Levinson, shout out to him. He asks, could you look forward to $800 per share, doubling from here, essentially $150 billion market cap or 20 times 7.5 billion in EBIT? What takes it there directionally? So this is where I think of Tesla. I try and not assume that a robo-taxi business will come into the company. And frankly, I don't assume much of the energy side as well, because I want to see, can Tesla's valuation be justified with significant upside just based on the vehicle business alone? And I think yes. So I think at 400, what are we selling next year? 600,000 cars. Let's say we're fairly valued to sell about 600,000 units at 70 billion based on the profit margins of Tesla. I think, if we're selling 1.5 to 2 million units, you assume some compression in the price sales multiple, the earnings multiple. I think 2 to 3 million units is where this company, just cars, not robo taxis, not energy, is worth 150 billion. And that could be less units if they push into things like the semi truck, which have a high ASP. So I think Tesla still has significant upside as a vehicle company. Think about it. Toyota is worth about 180 billion, the largest market cap car company, and they don't have this software component. They don't have this energy component. So I think Tesla, and frankly, in the long run, I think it's bad to value Tesla as a car company. And this is sort of a personal gripe I have. I just think people put way too much weight on comparables and comparing different companies when each company is so unique and so different. I think you almost have to look at it in isolation. Like Ford and GM make more money from financing leases of vehicles than they do actually selling vehicles. They're more like banks rather than car companies collateralizing to that internal combustion asset. So that's very different than Tesla, which is vertically, and all of those companies outsource everything. Literally all of the value chain is outsourced except for the internal combustion engine. They suck at software. They have huge debt. They're massively levered. And so Tesla is a very different company, vertically integrated, and they're much more profitable per vehicle. Like the operating margin of Tesla is already like 5%, and that's taking into account all this R&D for all these future projects, them setting up all this infrastructure to have more cars on the road, yet they're already making the same, 5% EBIT multiple that, let's say, Ford is. And so I think that's why you can look at Tesla as a car company if you want, but I like to just look at them as a computer company. Their computers happen to have wheels, and I think that's just a much better lens to understand this through.